Hey everyone, welcome to Fundamental Finance, our podcast where we talk about financial literacy. Today joining us, we have Saketh, Bach, Atul, Matthew, and myself, Karan. As a disclaimer, this isn't a show to tell you how to manage your money, but a show to teach you about important financial concepts to improve your financial literacy.
So today I was thinking let's talk about the topic of credit, the importance of credit scores, importance of opening a credit card as soon as possible, and what this score can really mean for you in the long run and as we start now. So I think let's talk about credit cards, right? We're about 18, 17. This is a time where you can get an authorized credit card or a credit card itself if you're 18. So have any of you guys opened one or thinking of opening one, talked with your parents?
I do have a debit card, but I haven't really talked about a credit card as I'm not 18 yet. I'm still 17. But maybe it's a good time to start talking to them about one and yeah.
Yeah, like the authorized user credit card, right? Like, have you talked to your parents about the benefits or how it can help you with the credit score moving forward?
No, not yet.
I see. Okay. So, I mean, as of now, I've opened an authorized credit card and then I just opened a credit card a few weeks back as I turned 18. So, what it helped me was I had the authorized credit card and then it gave me a credit score as soon as I turned 18. So, I had like a year's worth of payments on it and that gave me some establishment, like a 700-ish credit score. And then it helped me open a credit card and it was a decent one too. So, I could get points and whatnot. So, I think there are a couple of good things with the credit card that I can do. Like, so apparently with that score I'm building now, it'll help me with loans if I decide to take some next year. I don't know if you guys are taking any, but it could help with stuff like that. And I'm also making money off my card. Like I had like a promotion where if you spend $500 within the first 3 months, you get $200 cash back. And that's like, I mean, that's free money right there, right? So I think you gotta play your game right there. And I think Karan, I think you were saying you're opening up a couple cards soon.
Yeah, so I have a credit card myself also, and a debit card as well, like a tool. And I've noticed that a lot of the points and programs that my credit card offers is really incentivizing for me as a credit card holder. And perhaps later when I open up higher end credit cards, the points and offers that they'll give me will even be better. Like the cashback, I know that's a really popular one amongst most, if not all, credit cards. Cashback guarantee. We always hear about that on TVs, advertisements and whatnot. It's because it's such a, eye-popping phrase to get cash back, and especially on everyday items like grocery, gasoline, whatnot. So, I also resonate the idea that credit cards are very important for getting points, getting rewards, but also for rewards and loans. Sorry, also for loans. If you have a good credit score, 700 or above, you will have an easier time getting a higher loan because banks will be able to trust you. Okay, clearly this person has a really good credit score. They'll be able to pay their payments on time. They'll be able to give us our money plus interest. We can trust them with a higher amount of money compared to a person with perhaps a 400 or 500 credit score. They're going to have a harder time getting that type of money and getting that good of a deal on the interest paid on it.
So again, let's add on to what Karan said. Now, he talked about how banks will trust you if you have a credit score, right? But that credit score to maintain a good one, especially one above like 700, 750, you have to pay your bills on time and like spend like what they say roughly about 30% or less of your credit line or limit. So although it's a good idea to spend most of your money on a credit card rather than a debit card, given you're financially fit and stable, and at this age, unless you have a well-paying job, your parents will be supporting you. So, I mean, open up a couple credit cards, not too many, because otherwise that messes up your score too, apparently. And yeah, if you stay under the 30% limit, it it should help you build your score because and I mean the benefits are ridiculous too. Like I bought a tablet a couple weeks back on my credit card, and this was under my own money, but I get insurance on it, like 3 years of insurance, and that's like $200 from the retailer itself. So these benefits are paying off sooner than later. And yeah, I mean, I think a couple of you guys said you have a debit card, and I got a debit card. I think eighth grade summer, ninth grade freshman year, right? That I haven't used it ever since I got authorized card because I'm just losing money and not even getting like the interest you gain from having the money in the account and using it there versus the cashback points. Like it's like 2%, 3%, and it doesn't really pay off.
Yeah, I got my debit card, I think last year, because I had an internship, a paid one over the summer, and so I needed a checking account. So I also, got a debit card, but I've literally never actually used it. Because as you said, right, you don't get any money back. If anything, like I usually make like transactions or anything like through PayPal, not really through the card itself. But I think maybe it's a good time I think about getting a credit card.
Yeah, so I think services like PayPal, Cash App, Venmo, you're not really gaining anything. In fact, you're losing money, right? Like say you split the bill with your friends and they cover the bill, say it's $50, you pay the 25. If you pay the 50 yourself at the retailer, you could have gotten like $2, $3 back given the cashback rewards for the time being. And on top of that, say it was a certain like tech item or a phone, even you get insurance on that too, or like fraud protection, like if your phone gets stolen, whatnot, right? And actually, Atuli said a good point. You talked about getting a job, internship, and you need a checking account. But also, what I noticed was when I was applying for an internship, the company I worked at, they required a credit check, even though I'm like, what? I barely turned 18, right? So these guys also check if you have a good credit score to see if, like, your money management skills are good and all that stuff. So that's also really important. So, Bach and Matthew, I was wondering, do you guys also have cards or even debit too?
I have a debit card right now, but I talked to my dad about getting a credit card when I turn 18, and he said he's gonna open one up for me immediately, just so I can start building up my credit score as soon as I turn 18.
That's definitely smart because every monthly payment adds up, right?
Yeah.
So
Yeah, I'm
it's
pretty
also
much the same as Matthew. I have a debit card, and my parents is going to open a credit card as soon as I turn 18 this year. So
So yeah, I think the thing that goes with authorized cards are that it kind of rides on your parents' credit score, right? Because if your parents have a good credit score, you're just piggybacking off that. But again, if you do have that, it's good to take advantage of it now, and it'll add up in the future.
It is important to note, though, that although there's so many pros with credit cards, there's also a lot of cons. And we mentioned the idea that you can get cash back, you can get a lot of rewards and points, but that's being built on the fact that there's people out there who have the same credit card who aren't as financially stable. And what they're doing is they're just racking up a lot of loans, a lot of debt, and they're being killed essentially by the interest rates and all the additional fees that you get off not paying your credit card on time. And this is what banks and credit card companies love. And those that pay their payments on time are actually called by these banks and companies called deadbeat payers because of the fact that they're not able to go ahead and extract the most amount of money out of these people because they understand the finances, they understand the gravity of having credit and having a credit card and being able to consciously know how much they can spend and how much they should be paying. So it's important that whenever anyone gets a credit card before 18, after 18, or whenever they decide to, that they should know about the serious risks of having a credit card. I remember Saketh said that he had a job and he had a stable source of income. Therefore, it's smart and feasible for him to get a credit card at this time. But for those that perhaps don't have such a stable source of income, or perhaps their income isn't as high or robust compared to the credit card that they're holding, it may not be the best choice to do that. In fact, you might have to look at other credit cards for that.
Karan's exactly right. So, if you have a debit card, let's say you're a heavy spender, right? If you have a debit card, you're limited to what your savings account or checking account has, right? Versus a credit card. You can go literally triple, quadruple the amount of money you have on your account. Like you could have like $20 in your account. And if your credit limit's like 9K, you could blow through it all. And I remember when I was signing up for my credit card, it had like a 29.7 interest rate. And that's ridiculously high, And I think Karan's exactly right. That's how these credit card lenders, they make money on those who can't pay it off. They make a lot of money on the low income people. So, the rewards that we get back is from those people that they've like preyed on and made ridiculous amount of interest on. So yeah, we talked about the pros of credit cards a lot, but again, if you don't have the stable income, if you don't have control of how you spend, then credit cards exactly might not be for you. There are options such as like a secured credit card where you put the money in and then you can spend it over the month and it still helps you build credit, but again, you don't have the ostentatious like credit line that regular credit cards would have. And even for us being students, there are specific student credit cards which again have more help you build up those money skills with more restrictions, and that's something you can look into also. So yeah, exactly right. There's pros and cons to everything. Again, credit card and the credit system, I think that was made around the 1970s, and it's really hunting down on the younger generation because older generations had deep wealth and they were able to build off that. Like now you need a good credit score to get a house, interest prices, loans, inflation, all of that is unaccounted for in that whole calculation. And that's really tough for us, our generation, to really get into like maybe good housing, paying off debts and all that. So yeah, credit cards are very enticing, but you have to look at the bigger picture and see whether you can really manage it. And I think at least in our area, most of us will be backed up by our parents for the most part for the next couple of years. So that's how it's feasible for us. And I guess we could say we're relatively well off, and that's a reason why. But in other low income, disproportionate areas, credit cards are not feasible because their parents might not even have a high enough credit score to get them rolling. So does anyone have anything on that, like any questions?
Actually, yeah, going on the idea of credit score, how does one improve their credit score then? Let's just say one wants to get their finances in order all of a sudden, but they realize this number out of 800 is really haunting them and preventing them from getting a house.
Yeah, so I think what I remember reading was you want to lower your spending on the credit card and make sure you pay it off on time, right? Like, so first of all, the credit score, it's how often you pay it off. So maybe if you were paying it monthly, you might want to pay it every 15 days, like bi-monthly, like twice a month. And for example, I think right now I have like two lines of credit, and the more like diversity you have, like say, let's do a student loan, car loan, house loan, as long as you can pay them off, add these lines so they see that you can have a diverse portfolio of payments, and that should really help. But again, you don't want to put too much that you can't handle. And yeah, I think that would be a good starting point for us. But like focusing on, I guess, our age, let's say like college students, high school students, right? You're gonna have student loans, so you want to see if you can pay that off on time, right? So that would also be pretty good to build your credit at least. I mean, yeah, once your credit score goes down, it could really go downhill for you. Like it would be hard to get even an apartment, all that stuff. So it's really crucial.
Yeah. And I think that's like the idea of maintaining proper financial literacy. That's why we have this podcast, for those to better understand the pros and the cons of credit, and to know that, hey, having a bad credit score would be really, really detrimental to
Yeah, so
whatever you want in the future.
I mean, so we're talking about credit score here. I mean, none of it's real advice. We're just like, we want to get the ball rolling, like now that you know that the credit score and the credit cards could have so much importance, rewards, benefits, but also severe downfalls, all of us are going to eventually have to open this. So it's good to have your eyes open beforehand, rather than like one day you mess up, miss a couple payments, you got a 500, 600 credit score. Now you can't move out of your parents' house when you really need to and get an apartment. So things are really important. Yeah.
Speaking of house, though, I'm just curious, at what age do you all feel like you're gonna buy your first home?
So given the current, you see in the news, right? It's really hard for people to buy houses even in their like 40s and 50s, and especially in the Bay Area, right? So given that situation, it would probably be like what, right after college, live with my parents for 2 years, save
Mhm.
up. and
Makes
then-
sense.
Yeah, I don't even know if we can live in California at this rate. So,
Yeah.
something
That's
to
Definitely.
think about.
Bach, what about you guys?
For me, it's kind of the same thing, right? Because prices here are insane, right? Like a house, like let's say my house, right? Maybe when we bought it, I think 6 years ago, it was like 750K. But now like the price has gone up to a point where it's a million. And this is a like normal, like 4 bed, like 2 bath house, right? So prices here are like actually like really insane. And I think the same kind of applies with like if you're renting an apartment, like I think rent prices too are really high, especially in the Bay Area. So I think, right after college, I think the best sort of scenario would just be to stay with your parents, save up some money, and then, try to buy a house. Or considering how bad the prices here are, maybe like a different state or something like that.
Yeah, so I mean, for a house, you definitely have to take a 30-year loan if you really want to buy it, if you're not making, like millions. So I think that's where the credit score comes in, right? Like you can get a low interest rate, it'll help you finance it. So I think that's what we got to look at now. Got to play on the credit score can outweigh hard cash at sometimes.
Yeah, my plan for moving wise, I'm gonna go to college, and after college, I'm either gonna stay with my parents just to save up money, and I'm either gonna get a place around here in this area, or I'm gonna go to another state to buy a house where it's cheaper, because I'm not trying to spend a bunch of money for a house when I could buy a house like the same kind of house like a lot cheaper. And
Definitely
also,
see you, yeah.
when I opened up my credit card and building up that credit score, so I could, if I need to get a loan, I could get a good loan and not have to get high interest rates.
Yeah, and Matthew, on that point, like right now we might have good credit scores, but I think that credit score could easily fluctuate, right? Because we don't have enough
Yeah.
lines of credit and like maybe a year of history, right?
Mhm.
So it's going to take us a bit longer to build that like rigid, like whatever good score that we might have right now.
Mhm.
Yeah. So I think for today, that's a good discussion on like getting the ball rolling on the importance of for credit cards for us. What we can do with it, and big investments that the credit will help us with, like student loans and housing, because in 4 years we're really gonna have to face it hard. So yeah.
So, and at the same time, we also reviewed the dangers of having a credit card and the dangers of not having your proper finances in order, which could lead to banks loving you, but then B, your wallet hating you, right? So
Yeah.
there's always a double-edged sword, when it comes to credit.
Yep. So I mean, there are some benefits. You have to see if it works for your situation. If not, credit cards might not be for you at the time. But hey, you're gonna need it down the line, so it's better to take a look at it now than later. So I think we're good for today.
Yep.
All right, we'll see you next time.